Taiwan Semiconductor stock is exploding right now after reporting a mind-blowing, amazing quarter. A lot of analysts were taken back at how incredible the performance of this company was. Now, unfortunately, this stock is not part of my $84,000 portfolio, but I'm going to tell you a fun little story. At one point, it actually was. I actually used to own this stock and I ended up selling it for $134, as you can see from this listing right here. Let me zoom in for you guys a little bit right here. I sold it at a very smart price of $134, and I owned 67 shares of this company. If I had kept those shares, I would be up over $12,000, but I am not upset because even though I sold this company, I ended up using the proceeds of that investment to buy Google. As you can see here, I sold it in February, then I ended up buying Google in August, and I am up over 103% on my Google position with a plus of $25,000. But one of the things I really realized from this position is never ever take any investor's advice as one measure of truth, because I actually sold the stock because of Warren Buffett. He himself sold this same stock, and then when I found out he sold it a few months later, I sold it because I'm like, oh, his analysis makes sense. He said that Taiwan and China are too unpredictable. Well, if I hadn't listened to him, I would be up another $10,000, but I am not complaining. Sometimes you make those decisions. It's always a learning opportunity, and I am still up over 185% over the last 5 years. So I'm still happy with overall gains on my portfolio. But in this video, we're going to review the fundamentals of Taiwan Semiconductors and then see, is this company worth buying today or something we should skip? Well, first of all, let's try to understand its business. It makes almost 55% of its revenue from AI related chip sales. Now Taiwan Semiconductor is the manufacturer of all the chips that Nvidia sells and almost every other manufacturer, AMD, Intel, anyone you can think of. TSM is the one making their chips. Now, a few years ago, I'm talking only 3 to 4 years ago, the AI related space wasn't even 2% of its overall revenue. Today, it's 55% of revenue. Hence why you're seeing a massive appreciation in the stock price. Because if you went back 3 years ago, majority, and I'm talking 85% of its revenue used to come from smartphone sales. Think of the A chips in the iPhone. Think of the Qualcomm chips in the Android phones. This was a one-stop shop to get those chips made off the architectures that these companies had developed. So this explosion in AI has directly impacted TSM's growth and its stock appreciation, and is expected to continue for the foreseeable future. Now, a quick snapshot of the company makes us realize it has $129 billion in revenue, and over the last year, it had a growth of 36% for its revenue, and still, even though with such a massive appreciation in the stock price, in my opinion, it's still selling at a fairly reasonable price to sales ratio of 12. In my opinion, that's a bit reasonable. Most people might say that's a bit high, but I think that's reasonable for the amount of growth that's already done and its revenue. And it achieved all of this by only having 83,000 employees, which is very small compared to its peers like Google, Amazon, which have 250,000 plus employees. The fact that it can achieve this type of growth with such a small amount of employees, I think is very impressive. Now, when we take a look at what analysts think, obviously they are momentum driven. They want to buy this stock hand over fist. They're giving it a strong buy rating. Now, one thing I don't like is for 2027, you can actually lose money in this stock. I don't like investing in companies where analysts say, hey, you might be able to lose money over the next 5 years. I like to get into positions or into stocks where even on the low end, I make money. So the fact that there's a possibility that it can make me lose money in any scenario makes me a bit cautious. And if I look at only a 10% gain over the next 2 years for an average return, that's low. If you think about it, 10% gain is the average for the S&P yearly. So over the next 2 years, I'm only expecting to get a 10% gain. I think that's a bit too low. And on the high end is 17%, which is pretty good. 17% is pretty solid. Now we're going to head over to commoninvestor.net, the world's greatest website, to put a price behind the thesis and see what we get as a stock price. I've already put in the ticker symbol for Taiwan Semiconductor, and they already gave us a current metrics of the company. So to get a hypothesis, we need two pieces of information. First, we need revenue, and second, we need to hypothesize, is the number of outstanding share going to go up or down? I'm going to give you guys a spoiler alert here. Taiwan Semiconductor has never printed new shares and has never done stock buybacks over the last 10 years. So I'm expecting that to stay the same. So we're just going to say zero, complete zero for the amount of shares that are going to increase or decrease for this company. And in terms of revenue, when we ask ChatGPT, it says we can expect a revenue of $243 billion. When we ask Gemini, it says we can expect a revenue of $309 billion. Claude thinks it's $278 billion. And I don't know what the hell happened with DeepSeek, but it's saying 130 billion. That's what it's making right now. How can you expect it to make the same amount of money in the future when you have such a hyper growth still left to go when it comes to AI products and services? So we're going to ignore the DeepSeek one. I'm going to give you guys a freebie here. I'm going to go extremely bullish and say 350 billion. We're going to say 350 billion. And I'm doing this for a reason, because I feel like the company is extremely overvalued. I won't even argue. I'll give you guys the most extreme bull case and say 350 billion. Now, in my opinion, it is going to have a PE of 30 in the future. 32 is because there's a lot of momentum. That's it. That's why the PE is so high. And the profit margin is going to go down because, in my personal opinion, once AMD, Nvidia, and a handful of other competitors come into the market and we start meeting demand, all of them are going to go back to Taiwan Semiconductor and say, hey, we have met demand and we have excess supply. We're losing money. We need to sell these products at a discount to stay competitive in the market. You need to give us a discount so we can make this cheaper. And the reason why I say this, something similar happened in the smartphone space a few years ago. This was around 2017 when we hit peak saturation. A lot of smartphone chip manufacturers like Qualcomm and a handful of other ones went back to Taiwan Semiconductor and said, we're going to have to decrease the prices of our chips to stay competitive. Help us out by bringing down the cost and bringing down your margins. And then back then, it was at like 25% margin of profit. Right now, it's at 43. Think about that. So even from 25, it listened to its customers and it brought down its margins to 17% to help its customers stay competitive. I think similar thing is going to happen again for them once we meet demand. So I'm going to say 30% margin of profit for this company. And when we type all of that in, we get a stock price of $606 over the next 5 years, which means you are doing better than the S&P 500 by 77% at today's stock price. But you have to keep one thing in mind. You're not getting an easy 2x return. To get a easy 2x return, you have to buy the stock under $300. Now, I'm going to give you guys my honest opinion. I think this company is positioned for absolute excellence over the next few years, but I do believe this is way too high of a price to pay. A lot of things have to go right, and you don't know when demand is going to meet the supply. That is going to mean uncertainty for the foreseeable future. And because it's such a high risk, I would like to personally buy this stock under 250. I get it, that's a bit bullish, but that gives me margin of safety. Even if supply slows down, I will at least comfortably beat the S&P 500. The fact that even at $350 billion in revenue, and this is an extreme bull case, right? That I am not even getting a easy 2x return makes me a bit scared. And if I was personally really interested in this stock, I wanted to enter the position, I think this was the next great thing, I would start a small position today, because whenever you want to buy a stock, you want to at least make sure you're doing better than the S&P 500, and you're doing 77% better than the average S&P 500 return. So in my opinion, if you're really interested, not a bad price to enter at. But again, we want to have some sort of margin of safety. So I think appropriate price will be under 250. But as of right now, I have no plans to add this company to my overall portfolio. I am more interested in ASML, and I am more interested in Nvidia. I feel like Nvidia could hit low as 150 in the near future, and I might enter that position more. And I'm more interested in building up a position, a higher position in Meta and Amazon. Right now, I have $10,000 in both of these companies. I want to build that up to 20,000, but I'm waiting for a major pullback for me to enter more into it. I basically, at the end, in my personal opinion, I feel like you can find better opportunities in the market. With that being said, I hope you guys liked the video. I hope you guys enjoyed the video. Please like, follow, and subscribe. I post brand new analysis videos every Monday, Wednesday, Friday at 8 o'clock EST. And if you want access to exclusive content and access to the premium version of CalmInvestor.net, consider subscribing to my Patreon. And with that being said, I'll catch you guys in the next one.